Hello traders, this is a DAX recap video for March 29th for Friday and the last trading day of March and last trading day of the first quarter of 2019. This was the situation in the pre-market, picture of the chart taken at 7:51, and the market has shown us in the pre-market session that it is cooking a breakout attempt. As any attempt, it could be a good attempt leading to a proper breakout or a false one leading to a false breakout. And that is a typical situation in any kind of normal day, but today we really didn't get any kind of bigger moves. In fact, we had a contracted move and the market was all over the place, chopping up and down. This fast area here is fast area because on last Friday we had a trend down day and it was here, like a big move to the downside, pullback and continuation move. It was a 300 pointer day, and here market really didn't make any good levels. So this was the speculation. If the market is going to make a strong move above this zone, it can go with the same force to test this larger time frame resistance. And in the morning notes I said that the week was light with news and the real catalyst, and markets were shaking players on both sides, and that theme really continued today. Although they were testing this for the third consecutive day, and that was a speculation of real break, good move, false break, good move, but none of that really happened. I said that the market that wants to make a breakout would be above this pre-market support zone. So this zone and this was the new zones. And that they are going to attempt to go higher from the pre-market range. And pre-market range was here. They did attempt, but that attempt was, as you can see, very, very weak. Now we are on the charts, and let's go now to the 5-minute chart and to observe where were our opportunities. So market tested the resistance zone in the beginning of the future session, and then again on 8 a.m. hour before, and then they opened right there at resistance zone. So whenever you have a market that is opening right at resistance or right at support, the first move really should be from resistance to down and from support to up, of course. And although there was a risk that market will make a breakout attempt immediately and stop you out, resistance is resistance until broken, and support is support also until broken. So that was here our first chance. And the most horrible thing that could happen to you is, as always, 1 hour loss. We had a situation once that market spent entire pre-market session inside of the larger time frame resistance, and then as they opened they made a breakout. I think that was the breakout day of January the 18th. I'm not sure, but today that really wasn't the case, because here they made some kind of pre-market range. It was inside these 50 points, and we had a zone-to-zone move. Although there was absolutely nothing fluid here, it was really painful to watch this chop, but they made a move into the pre-market support. And now that is your first target if you want to unload something, and you had every right in the world to think that if they are going to fail from here, that there could be some bigger move. But if you're holding this and now you observe that this is bouncing from the pre-market support, now they're testing it again with more momentum, quicker test, and going slightly below, then they're immediately coming back. So that could mean really that this is a false breakdown attempt of this zone. So you should really at least close your short, and if not, prepare yourself for the long. So again, two-sided activity, because basically this is here still a buy the dip market, and everybody is buying dips, as we can see also on the S&P. And from here, when you observe that this is a false breakdown, so you could of course attempt along on the first test of the zone, but this here you get a confirmation. This is now looking really like a false breakout, and now from here your target should really be to expect a full-time breakout. And in this period of time it was really looking like bulls are not joking. Now they are going above, and especially when they did retest this level here, which is the high of the day at that time, so current high of the day, they were broken, and now retesting, going higher, and then run out of gas here. And they're going back below. This reference point is an visual indication for us that they should really go more above it if the breakout is real, because just poking 10 to 20 points above the zone and swiftly going back into it and below could be a false breakout. And so you're holding this, but you see now that they are struggling and struggling and struggling, and you should really close your trade when you observe that they are going they're going down. And in this period of time there were here some smaller opportunities. I have shown you one, but those kind of opportunities to catch this move to the downside, expecting it to be a real false break, yielded just 20 points, but for those traders who took it, and those who didn't, like me, we got break even on that, because market was just in some kind of choppy mood, and the same mood was here and is still here on the S&P. As you can see, again, up channel, up sloping channel, and buy the dip market. So unfortunately, again, we didn't get a bigger move, and after these few hours, so this is here already 11 o'clock, and you observe this chop. Now, the idea of the bigger moves after first 2 hours is already, shaky idea. It's already like a 50-50 scenario, and in that case just stick to zone trading as you would do in any kind of range or sideways activity. So market is grinding higher. They just grind, and you can see that on a 4-hour chart, on daily chart. Daily 50 still providing support, and I deliberately made these two screenshots on the daily chart, one at 11:34, just to show you that price is an advertising mechanism, a line that I have picked up from Jim Dalton. Here it was looking like, aha, this is a big bearish engulfing candle piercing this bearish wedge, and now we could have just a pullback and rolling over, and now we could get this 38.2 or half back or even lower. But then just 1.5 hours later it was looking like this. So really it doesn't matter how any of the candle looks like, especially the candle that didn't even close yet. That is why we have zones as the points and areas of market participant interest. Those are the inflection points. As you can see, in this first period of market activity, they did what? Just zone to zone move, attempt to go above the zone and below, and nothing else. So again, waiting period is continues, and we shall see from Monday. You will get another weekly video with a deeper look at the larger time frames of DAX and US indices. I wish you a good weekend and good trading.